I mean, that's what's amazing about this deal is that it was shovel ready when you bought it.
Yep.
And the second it was done, they were sold.
And no money out of my own pocket.
And no money out of your own pocket. Just leverage relationships. Yeah.
Leveraging relationships.
Welcome to the BiggerPockets Best Deal Ever show. I'm your lovable host, Ken Corsini, who with my wife, Anita, have flipped over 800 houses in Atlanta since 2005 and even have a show on HGTV. But this show isn't about us. It's about all the amazing real estate investors out there that are crushing it. It's about their stories, their best deals, how they sourced them, how they funded them, and what we can learn from their experiences. This is the Best Deal Ever show. Hey, this is Ken Corsini with the Best Deal Ever show. On today's episode, I am joined by Matt Faircloth. Matt, how you doing, man?
I'm awesome, Ken. Thank you so much for having me.
Man, thrilled to have you on. You know, I had your wife on just a few weeks back.
I know.
And so hopefully we get a different story out of you today.
Yeah, it will be. It will be that. That'd be bad if I told you the same story she did, but no,
That's
I got a
right.
new one for you.
That's awesome. And so tell me, obviously you're super active on BiggerPockets. Got your own YouTube channel. Now, I think you've done a book with BiggerPockets too. Is that right?
I have raising private capital. It's a great book. It's about how anyone really can tap into their own network to show people in their network how they can expand their wealth through investing passively in real estate. And it shows how to have those conversations, structure those conversations, and set up deals with private investors and also exit deals with private investors too. So it's a full-on how-to book. And I've been getting a lot of great feedback from it from those that have read it.
Killer. Well, it's the lifeblood of your business. It's the lifeblood of our business too, is having great relationships with private lenders, right?
Yeah, absolutely. They put us on a lot bigger deal scale than we could. And a lot of today's story is about how our private lender really succeeded very well as being a part of the deal that we did. He was a big winner in this.
Nice.
And that. So yeah, they give us access to deals that we wouldn't be able to do, or at least deal volume that we wouldn't be able to do without them.
I think that's a great segue. I say we jump right in. Let's hear about this best deal ever.
We are in just the outskirts of Philadelphia.
Okay.
That's where Liz and I live. Our office is in Trenton, which is about 25 minutes, half an hour north of Philly.
Okay.
So we've done a lot of work in our career in Philadelphia. We're also very well connected to a woman named Andressa Gadelli, who has been on the podcast.
Oh, yeah.
And runs the Real Estate Invest Her Show podcast with Liz.
That's right.
And Andressa is also, her full-time gig is being a construction manager. And that's a whole nother thing that she can tell on her own on what life is like as a female construction manager working around in construction, as I'm sure you guys can imagine.
Yeah.
So we had done several successful deals with Andressa.
Oh, okay.
And we were looking for more. We'd done some flips and it just looked at the market. And Philly's a tough market. Like
Sure.
any other hot market out there, it's not just like going and plucking an apple off a tree. You got to go find the good deals.
Right.
So we were shaking down our network, looking for something to get ourselves into. And I was networked with an architect. And I called the architect up and I said, we're just looking for deals, looking for opportunities. And this is an interesting architect because he also had a wholesale business. Like he would go and find deals, design the plan, and then wholesale the deal and the plan
Smart.
to an end buyer. So you'd buy turnkey, turnkey product, and at the right price, it worked. Me and Andressa went and sat down with this architect, just talked about deals, talked about opportunities, and of course, then a wholesaler, a lot of things don't necessarily work for the price that they or what they
rarely,
want.
right? Rarely does a whole deal work, right?
Yeah, right. Well, yeah.
Unfortunately.
Right. Not every deal worked, let's say, that he presented and everything like that, which was fine. And then he paused and he said, well, I do have that other deal. And he said, but I've really been looking to do it myself, but I'm a little short on cash right now, but I really would like to wait and do it myself. But you could just see him hemming and hawing. And I'm like, he's got something.
Right. Yeah. You spit it out. What do you got?
Why don't you tell me about it a little bit there,
Yeah.
And so he told me, it's like, well, I got this plot of land that I bought and he owned it, right?
Okay.
So I got this plot of land that I own that is right on the bubble. And so a great neighborhood in Philly is one. There's several great neighborhoods. And one of the great ones is called Fishtown. Okay.
Yep.
Funny name, but Fishtown, okay, is the name of that region of Philadelphia that's done very, very well.
Okay.
It's landlocked. It's surrounded by some train lines and the water and a highway and everything like that. So it's got a lot of good fundamentals that have allowed a lot of push in growth to it.
Yep.
This lot that he had was across the street from the end of Fishtown. Okay. So Fishtown's here. This was right over here. Okay. And the bubble had moved around it and had when I say the bubble, I'm talking about, new development, because Philly, you can just see where new development is happening and where it's not. There's, new construction, new development, cranes, construction, and then go a few more blocks from that, and you got board ups and, folks hanging out in the corner and stuff like that. It gets, it's
gets
night
sketchy
day.
real fast. I get it.
It's a tale of two cities.
Yes.
Not all of Philly is awesome. A lot of Philly is still a little rough, but the parts of Philly that have blown out are, right on the edge of the rough parts. So you have to kind of find the edge of that bubble. Yeah. This property was right on the edge.
Okay.
And so he said, I've got this piece of land and I haven't earned a contract. I own it, and I've gone through the city of Philadelphia to get it rezoned and to get it approved to get subdivided into 3 building lots.
He'd already done all the hard work.
He's an architect.
Yeah, right.
So he's licensed to do the work, right?
Smart.
And he had a team, and he, hired an engineering company to go and do the civil and to do the geophysical studies to do the, take dirt samples and make sure you can build something there and everything like that, right?
Yep.
And so he had, in essence, a shovel-ready project.
Wow.
And so I was like, I'd never at that point, I'd done some new construction, but not 3 in a row like that. And I said, why don't you tell me more? He's, well, I'm looking for a good number for it. He wanted $210,000 for this piece of land, but that was shovel ready.
Yeah,
right?
all the work's done.
Yeah.
And that's for 3. So really you're talking 70 a lot, potentially?
70 a lot.
Yeah, okay.
Right.
Yeah.
Sounds like a lot of money, but at that neighborhood of Philadelphia, the out sale was somewhere between 350 to 380 on our numbers.
Yeah.
Right.
That sounds pretty good.
Worth the conversation, right? Let's look into it. So we investigated it further. We drove by the lot. We talked to him, and I sat down with him again, and I was like, "Listen, we like the deal. We'd like to buy it from you, and we'll give you your full asking." And I did a little bit of homework. This architect had bought the land for $90,000.
Oh, dang. He's already making his money at 210. Yeah.
He's doing all right. Now, I admit he had some overhead. He had to hire an architect. Sure. I'm sorry, hire an engineering firm. He had to hire a lawyer, but all that, didn't cost him $100 and whatnot $1,000, right? So he was making a nice chunk of change in there. Yeah. And I laid it out. I was like, listen, public record shows me you bought it for 90. Okay, let's just put that on the table. It's okay. I'm not calling you out for making a profit, but you are making a nice profit. Let's let you take that. You can take that money and pump it into your new stuff and everything like that. I'm giving you what you say you want for it, so let's do it. The only thing I'm asking for is I wanted he's an architect, so he can pull permits. Totally. So give me full-on construction drawings and give me permits at closing. So when I close, I want my permits in my hand.
Nice.
Right? Nice. So he said, deal, we'll do it. So I said, okay, now we got a deal. I called my bank and I said, I got a great opportunity. I need to build these, I want to build these houses. The construction cost was going to run around $750,000 to build 3 houses. Okay. I'm shooting from the hip here, Ken, but it was around
250 each.
What?
So 250 each per house.
250 a door. It was around 200. It's around a 2,100 square foot house. Okay. So just over $100 a door all in, which is pretty good for new construction.
Great.
And not to get too granular, but when you're building townhomes, you have a common mating wall. And so it does lower your construction cost a bit in a townhome model versus a single family home model, because you have some common envelope that you can take advantage of, right?
That's right. Yeah.
So, and also, the plumbing's going to be a little bit less per door because the plumber comes out. He's not going to come and plumb one house and then go home and come back and plumb your next one a month later. Right. He's just going to go and do, door 1, door 2, door 3. And then the HVAC guy is going to do the same. So we were able to leverage down construction costs a little bit because we're building 3 and that. So $750,000 for construction. My lender looked at it and says, listen, this is a great opportunity. We like it. And my lender said, I think your comps are a little bit low, because we said comps at 350 to 380 a house. My lender said, we think you're a little bit low on that, but we'll do it. And so he said, the only thing you got to do is you need to buy the land free and clear. and buy the land with cash, and whatever startup capital you need has to be out of your pocket. I'm not going to lend you any of that, but I'm going to lend you 100% of construction.
Okay.
So,
and this is a private lender?
No,
this was institutional. It's bank. Okay.
It was a bank, right?
Got it.
Like 5% interest, 1 point origination.
Right.
So I talk about this a lot on BP, that every investor needs to go and find a small community bank. Totally. This was a small community bank. Yep. I mean, they got like 5 branches, and not one branch was any more than 30 minutes away from this job site.
Nice.
I was talking to the guy with the checkbook in his pocket, like the loan officer was the one that approved loans of that size.
Yeah.
That's what you want.
Perfect.
If you're just getting going and you don't have a small community bank in your pocket that you're working with, go get one.
Agree 100%. Yep.
Yeah, they're going to acquire a depository relationship and all that, but that's fine.
Yep.
So I said, okay, great. And my money's in a lot of different projects, and I didn't want to go put all my money in to go buy this land free and clear myself at $210,000 plus down money and everything like that. So I wasn't able to I didn't want to do that. Let me go, go by the terms of my book and of raising private capital and go find a private money lender.
Absolutely.
The problem was, Ken, a lot of stuff that I do for stuff like this, where you buy a property, build it out, and then resell it, or go buy a property, build it out, and then refinance it for a rental.
Yeah.
You can do with a private loan, right?
Yep.
You give them collateral on the property. That's their retainer that they get. That's their just in case is their collateral. The problem is my private money, my bank was not going to let me put a second mortgage lien on the property. So what do you do, right?
Yep.
I came up with a model. I was like, I'm going to do a joint venture. And I talked to my lawyer about it.
Yep.
And I said, I'm going to JV, which is pretty much where I talk about it in my book. This is where a lender becomes also an equity holder. They're still a lender. They still get a rate of return on their money, like a base interest rate, but they also get a chunk of your profit.
Well, they move from the debt side of the table to the equity side of the table.
They do, but they still get treated in their head. They get their head around it. You're still a lender. You still are loaning me the money. You still have collateral, but your collateral is kind of the upside profit, and you're still guaranteed to get the bottom line interest on your money, right?
Yep.
So we structured a JV. I had somebody who reached out to me off of BiggerPockets, off of some blog comments that I'd made on Philadelphia and the Philadelphia market. Guy had a self-directed IRA. And so I said, listen, this is what we want to do. I already got a letter of interest from my lender. Here's the out sale projections on the property. And so I need $290,000 in equity coming into this deal. And my lender said, I'll do it. And not my lender, my private investor said, I'll do it. And he put his IRA into this project. It's important to note that he put his IRA in here, Ken, because this is a short-term capital gain project. Had he put his own cash into this deal, he would have been taxed at his ordinary income tax rates, and he would have taken it on the chin.
Right.
So it's very important to note that when you're working with private lenders or people that are going to upside of your profit on a deal like this, that they are a IRA lender, so they can defer the taxes on something like this.
Absolutely. Yep.
Right.
Good point. Now, why did you borrow $290 from him rather than just the purchase price of $210?
Because remember, the way that these construction loans work is the bank's not going to just say, okay, Matt, here's $700. Glad you closed. Here's $750,000 to do your construction work. Call us when it's done. They want to see, okay, you've dug your holes and poured your foundations. Here's $30,000. You've framed the houses. Here's $40,000, right?
They're reimbursing you for expenses you've already paid for. Absolutely.
And people need to note that when you're getting a construction loan, any savvy construction lender, and most importantly banks, but also savvy private lenders, are going to require you to do the work.
Yep.
Then they'll give you the money.
That's right.
And that's a good
point.
You can't say, 100% no money down. I don't have to raise any money. They're just going to just start writing me checks. No, you got to do the work. So you have to have money to do that work.
That's right.
Right.
Good point.
To get started. Right.
Yep.
So we wanted to have $80,000 for closing costs and for getting started money.
Smart.
Right.
Yep.
So everybody's all in, and we closed on the land. Interesting, Ken, we closed on a Tuesday. We were in the ground on Thursday.
That's amazing.
Isn't that crazy?
A great way to negotiate that. I want permits before I close. That's fantastic.
It's so important to do. Golly. And a big note for lenders, and we've used this tactic in the future since this deal, that if you're buying a property that requires permits, go ahead and pull the permits while you're under contract.
Get them. Because those can take forever. Like you could stretch on for a year like I do in Atlanta sometimes, and you're sitting on this hard money or sitting on a bank loan, just waiting on permits, and your interest is just eating you alive.
Paying that interest while you're waiting on the town to get around to it.
That's right.
The government has no incentive. They're not going to scramble for you.
Nope.
You know, they're going to put you in the stack. You
That's
know,
right.
and if you're in the middle, then you're in the middle.
Yep.
Of the stack, and they're going to work their way down until they get to your permit request. It's imperative because time is literally money. When you're working with private money, time is literally money.
It is.
And so that was imperative. So we closed on Tuesday. We're in the ground on Thursday, digging holes. Awesome. So built the houses out, made a few tweaks. And luckily, you know, in our budget that we submitted to our bank, we had some contingency, which I strongly recommend. If you're ever doing a construction budget to anybody, I recommend between 5 and 10% contingency. Contingency means just in case money, things come up, right?
Totally.
Now, it's on a fix and flip, which I'm sure in your business, Ken, you ran into this all the time. You're going to come into stuff. Like we opened up the wall one time on a fix and flip, and the whole wall was full of termites. You know, like, oh, we didn't have that in the budget.
That's right.
You know?
Yeah, especially on fix and flips, because there's always unknowns. New construction, not quite as much unknown.
Shouldn't be.
But like, you never know.
Here's the plans. Well, what came out of contingency, and people should note this, because you can't say, oh, it's new construction, I don't need any contingency. Here's what happened. We changed our mind.
Oh, wow.
Right? Yeah. Things come up. You're like, you know, I think Andressa wanted to put like flower boxes outside the windows. Well, that wasn't in the plan. And the contractor was a very nice guy, but this isn't a hobby for him. He's got to get paid to do things like this, right? Yeah. So if I want to put flower boxes out, or there was an egress issue that we had to address also, meaning like how you have to have two means of egress in cases of fire or whatever, we had to address that. So things like this tend to come up, and it's not always things that you weren't aware of. It's just sometimes when you want to create a great product, like, you know, wouldn't it be great if we tiled that backsplash? Well, the contract, tiling the backsplash wasn't in the budget. I'll do it, but it's going to cost you an extra $2,000. Okay, great. If you got a contingency, that's a good place to apply it. I'll do that.
Right. Yeah. Right. Smart.
We came in, consume most of the contingency on the deal. The second big win that we did here that I think was a big success was we started marketing the properties when we were halfway done, right? We came up with a concept, which you guys might have done too, where the property's not all the way finished, but we put it on the MLS.
Yep, totally.
And the broker started doing these things called muddy boot tours. Instead of an open house, you know, they called it a muddy boot tour. And you're kind of telling your buyer, saying, listen, don't be wearing open-toed shoes because you're walking a job site.
That's right. You know? And sign this waiver before you step on the job site.
Yeah, please sign here. And you're not going to sue anybody. You're not going to right. So we let people into these houses once they were secure and safe and the stairs were in. Everybody, you know, walking up ladders or anything like that. But once the properties were buttoned up on the exterior, but before we hung rock, you know, and before we painted and things like that, we would do a few muddy boot tours. And what was great about doing that was we made the market aware of what was coming online.
Yep.
We engaged in conversations on all 3 townhouses, and I'm super excited to tell you that right after we had CO, we closed all 3 of them.
Did you really? So it worked.
Yeah, man.
Yeah. You got enough excitement.
It worked. Right.
Yeah,
it worked.
It totally worked.
Now, next win, we bought right on the edge of the bubble, and we bought on an up market. Some would say we got lucky, which we did. Sometimes you got to get lucky. Right. The bubble took 10 months to build them.
Yep.
While we were under construction, the bubble moved beyond us. It kept going.
Nice.
Right. Nice. We were in the path of progress. So before you know it, they're opening up a coffee shop and a vegan cafe down the street and a tattoo parlor, and there's hipsters walking around and all that. And you're like, hey, this is great.
Like jackpot.
Yeah, I know. Right. So our outsale target went from 380 to 425 per house.
Dang. That's awesome, man.
Right.
Yeah.
So sometimes you catch lightning in a bottle. I mean, it's one of those deals. I wish there was 30 lots, you know?
Yeah, I know. Right. Exactly. It never ends up that way, though.
Yeah, I know. Right. So anyway, we ended up putting them up for sale. Contractor had a lot of integrity. Everything was good. Got the deal done. Closed 10 months out. And that, you know, I mean, there's a lot of lefts and rights in there, but really no big surprises or nuances. A few things on the build that I recommend: know your market. In Philly, it's very common. Philly has a beautiful skyline, and it also is on water. And so a lot of people want to have a rooftop deck, and it's a dense urban community that has a lot of homeowners in it. So if you want to have homeowners that are only going to be willing to pay you that kind of number for a property, you got to have a rooftop deck. So you can see, and from the rooftop deck of these properties, you can see downtown Philadelphia, the Delaware River, and all the
Nice.
bridges. It was
Nice.
insane.
So you did a
skyline
flat,
view.
open top roof?
Yeah. Well, no, not like you walk off the edge, but it was a lip like that, like a lip that came up to about what an adult's waistline
Sure.
would be.
Yep.
So if you had kids, it was be above a kid's head to
Yep.
where a kid couldn't climb up on it or whatever.
Right,
So it was safe.
Yeah.
And
Nice.
you put and you put electric and water up there so they can do barbecues, and that, in essence, in an urban community, Ken, that becomes their backyard.
Totally. Absolutely. That's
they're
their
going to go and have
space.
barbecues and go hang out outside and go get some sun or whatever it is you're going to do. You do it on the roof.
Absolutely.
Right?
Yep.
You know, and I mean, if you want to go have a catch with your kid, there's a park 2 blocks away.
Yep.
You know, that's kind of that's urban living.
That's perfect.
Bottom line, sold them out, and the numbers shook out like this. Our private lender, I forgot to mention this, the deal structure was this. He made an 8% flat rate of return on his money as if he were lending us money. I don't make monthly payments to my private lenders. I pay him at the end, and that. So he got his money at the very end of the deal, 8% plus 12% of profit.
Oh, wow. Nice.
Yes, that was the JV.
Yeah, heck yeah.
That was the JV, because I had to collateralize him or give him something, because he couldn't have collateral on the deal. I couldn't give him a lien to protect himself. I had to give him something more for the perceived risk he was taking.
Sure, absolutely.
To give him 12% of profit.
That's a fair deal.
He put in $290,000. In 10 months, he walked away with a total of $46,000.
Whew. Heck of a good return in 10 months.
Crazy.
Yeah.
And now, remember, had he, what I said before, a big lesson, had he put his own cash into that deal, cash out of his own pocket, he'd have probably given about half of that away to the federal government.
That's right. Yeah.
Right.
Instead it went right back into his IRA, all tax deferred. He's
all tax deferred. He can leverage it up. Then he can take that $46,000 and go and parlay it into the next deal and practice compounding interest and blow out his IRA.
Yep.
It's really about building wealth. And it's important for real estate investors to realize that part of what we do as educators, to show people like this, that listen, this is how you can also build wealth in your retirement account by working with me, and I can show you how to do it. Yeah. So Andressa was our construction manager on the deal.
Yep.
We were the kind of like the coordinators, money partner, deal finder. So we did a 50-50 split with them. Yep. With Andressa and her company, and Liz and I with our company on the deal. And we made a phenomenal profit too.
Heck yeah, man.
Yeah.
I mean, because you originally were thinking 350, mid threes, you ended up selling for 425, and you were all
times
in
3
for what? Just over 300, right? Right around 300 was all in per
we
unit.
Out, we collectively made around 150,000 total and then we split that among our partnerships
over a period of 10 months. So in less than a year. Yeah. On one project.
In 10 months.
And had the deal. I mean, that's what's amazing about this deal, is that it was shovel ready when you bought it. And the second it was done, they were sold.
And no money out of my own pocket.
And no money out of your own pocket. You just leverage relationships. Yeah.
Leveraging relationships.
Heck of a deal, man.
There's a lot of people that may be watching this saying, I can't do that, or Matt can do it because he's, the BiggerPockets guy, or because he knows people, whatever. It's all BS. Not true. You guys know people. You could just reach out to the right people. If you want to do small development like this, you can call a wholesaler if you want, but call an architect. They know of things like this. And architects are the most unused resources in this business. They know of deals. The architects also know, they can also tell you where other developers are pulling permits. So they can tell you where the bubble is coming in an environment like that.
That's a good point. That's a good point. And they know builders, they know investors, they might know people that want to partner with you as well. They're definitely a good resource. Absolutely.
Yeah.
Matt, this was fantastic, man. What a great deal. Start to finish. Slam dunk.
Thank you
so much. Really appreciate you coming on, buddy. We'll talk to you soon.
Yeah, man. Thanks for having me.
All right. Take care. Thanks for listening to the Best Deal Ever show, brought to you by BiggerPockets. If you've been energized, entertained, or enlightened by today's show, please feel free to hit the subscribe button. You can also follow me on Instagram and Twitter at Ken Corsini, or check us out online at redbarnhomes.com. And don't forget, one man's best deal ever may be the inspiration you need to create your next best deal. So hope to see you on the next episode.